Hey guys, welcome to the Nitty Gritty Real Estate Podcast with the Tom J. Krieger team. This week on episode 49, we are talking about what do the experts say about today's mortgage rates. Let's get into it. All right, Tom, episode 49, the Nitty Gritty Real Estate Podcast with the Tom J. Krieger team, Tom Krieger and Matt Barré here, talking about market and the interest rates. In particular, what are the experts saying about today's mortgage rates? So let's get right into it. I know we get asked a lot of questions with regards to what are the rates, and typically we divert them right to a lender and get the lender to ask the question. But we want to talk about what rates are doing, what does that mean with home prices, home payments, all that sort of stuff. So let's get right into it. Number one, they're at record lows.
Yeah, well, they were
near to.
They were as we're doing
lows.
this, Matt. Now things are changing, and America, please understand that rates are changing, and they may be changing every week. They may be changing every 2 weeks, but they are changing, and the change is they're increasing. Mm-hmm. We don't expect them to come back down to these lows. So if you are in the market to acquire lending for a purchase, do it now. Lock in if you can right now. Yeah. The reason for that, Matt, is that our inflation has taken off. Okay, and the Fed said that it was going to be transitory. Well, unfortunately, the Fed chair came out a couple of days ago and said that it isn't transitory. It's going to be here for a while. Right now, the inflation rate's about 5.6, 5.5, depending on where you look at it. But projections are by the end of next year, it's going to be 8%. So if you're on a 10-year bond and it's 1.3 or 1.2 and you have 8% interest rate, you're losing money. So you invest in a bond, you're literally losing money. Mm-hmm. And the cost of that bond is less money too, right? So again, I don't want to get into the weeds here, but the reality is as interest rates on the bond market rise, so do the interest rates on your loan for your mortgages, okay? Inflation, as we talked in a previous episode, when inflation starts to climb, mortgage rates start to climb. And why? Because of the velocity of money that we have out there. The Fed is going to slow it down a little bit. Yeah. We expect a correction in the stock market. When? Nobody knows, right? But once that happens, you're going to see the flight to the bonds, right? And when you see a flight to the bonds, then they're going to pay less money out on the bonds, which means that interest rates are going to go up.
Mm-hmm. So talking about rising rates and rising rates in the coming months, we're already seeing it.
Yeah.
You know, we were actually just talking about this with our coach, Jeff Mays, this week, that, articles are coming out that, some of the big news outlets are already predicting or already seeing, a small little increase in the interest rate, but they're expecting it to, go pretty bananas in the next couple of months. And as you mentioned in a previous episode, possibly by next year being back at 4.5% or 5%, who knows where we could be. Yeah. But you're not going to be back in the twos where we were in the back end of last year and the early
those
this
days
year.
Are gone.
Yeah, those days are absolutely gone.
Those days are gone.
So mortgage rates, are they generally the same across the nation? We're based here in Tucson. We've got listeners all across the country. And they may be listening to this and wondering about, Matt and Tom are talking about, 2 3/4 or 3% in Arizona. Where am I at? Are they generally the same across the nation?
Yes, mortgage rates usually are generally the same across the nation unless you're in a certain economic areas. Like sometimes you'll have a TIF zone, okay? And where they'll lend money to you, and usually that money is lent to you either by the federal government or by the state government at a lower rate to try and spur economic development in an area. But generally, in your housing mortgage rates that we talk about, they're usually within 1/8 of a point across the United States.
Yeah. Yep. Okay. So, one thing's, really important to keep in mind here, that even small increases in an interest rate can actually have a really big impact on a monthly payment. If you are looking to buy a home and you are very budget conscious, you have a fixed monthly amount in mind that you want to spend and you don't want to go a penny over, and that's okay. A fluctuation from a 2.9 to a 3.1 doesn't sound a lot, but that could be enough just to tip you over your monthly budget where you're like, well, hold on a minute. For me to be back on budget again, I've now got to go shopping $5,000, $10,000, $15,000 less on a purchase of a home. And you may have actually now put yourself in a window where there's no homes in that area or that price point that you like, want, or wish to buy.
Or that can move in. You may need improvements,
or
right?
you can move it that are livable. Exactly. They're not moving ready. So again, a 2.9 to a 3.1 doesn't sound a lot on paper. It's literally a couple of decimals, but it could have a massive impact on a monthly budget.
Figure $80 a month difference. What is that? That's 2 tankfuls of gas.
Yeah. Yeah, right? It's a meal out with the spouse, that's a night out with the family, to movies, it's a lot. It's something you have to give up.
Exactly.
It's something you have to give up.
Or like I would like to see is it's less money you can invest. I'd rather people think of it as, man, I could invest that money. Mm-hmm. I could put it in a bank, saving it, because I'm all about savings, right? I'm all about affording something, but also staying within your budget. So if you got to pay $80 more per month, that's $80 less that I can put in my IRA or that I can put in the kids' college funds, right? Mm-hmm. Think about it that way, and that's cumulative over a 30-year period of time. Mm-hmm. So it's better to act sooner than later.
Yeah. Yeah. And, it's still an investment. You are investing in a mortgage, which is in a property, bricks and mortar, which will appreciate. But, I'm seeing and talking to buyers who will we just won't go out for dinner once a month. We'll cancel our date night because that $100 we'll put towards the house. Well, hold on, guys. What I'm hearing is you're willing to eat ramen with the lights off to get a house that you can't afford.
Yeah.
You got to still live.
So flip back to the 2007, 2006, very early 2008. You'd see these big monstrosities these people were buying, and you'd walk in the house and there's no furniture in the house. They spent all their money to buy the house, but didn't have any money.
Sitting on camp chairs.
Yeah, didn't have any money for furniture.
Yeah.
Right? Yeah. So what are we doing? Keeping up with the Joneses?
Yeah. So you got to be, you've got to really know your budget and then also be very, very conscientious of where the market's going. And if you are shopping, you may have been pre-qualified 2 or 3 months ago at a 2 3/4, which is great. But have you checked in with your lender recently to see where the rates are? If you were to write an offer today, where would you be?
Yeah.
So many people don't do that. It is imperative that you check up where you are right now and where you stand, because that home you were looking to buy, you may not be able to afford it anymore. So that's my top tip for right now.
Hey everyone, we want to interrupt this episode to let you know that we are a Keller Williams Southern Arizona franchise.
Also, we are licensed realtors practicing equal housing.
Now, let's get you back to the podcast.
What are the experts saying about COVID and mortgage rates and COVID?
Well, I don't think anybody really knows, to be honest, Matt, about COVID, honestly.
We're not going to fix the problem
so
right here, right now.
You got this variant, you got that, you got this. Who knows what's going to happen a month or 2 months from now, right? But COVID is impacting interest rates, okay? It's impacting the ability to have product on the market. So I don't know if anybody can pinpoint what COVID's going to do. But here's what I believe. I believe that we as a society need to make a decision. Are we going to be more focused on our personal health, or are we going to be more focused on being scared? I say be more focused on your personal health, your financial health, and don't worry about being scared.
Yeah. Great point. One thing I want to note here in some of the data we found is, which I think is a great point to note, when mortgage rates, and it goes back to the national question, mortgage rates are generally the same across the country.
Right.
So a decline, or even in this case, an increase in mortgage rates can boost your affordability equally in different markets.
Right.
So if the interest rate was to increase, let's say here in Arizona, and it increases nationally, that you may be priced out of Arizona because where our base price point is, but you now may be looking at other states, other cities where you're still within your threshold. So if you're an investor looking to invest, and we've dealt with investors before, people may focus on Arizona, but with those rates, they may want to now start looking at Georgia, and they may want to start looking at different states, because all markets aren't the same with regards to their average sales price.
Correct.
So if you are an investor thinking about looking at buying in Arizona, and we're, give us a call. We can connect you with agents in every city, every state, pretty much every country almost, where we can look at these data and look at these numbers. So
man, I just want to touch on that. So think about this: the value of a 1,500 square foot home in Silicon Valley and the value of a 1,500 square foot home in Oklahoma City.
Yeah, absolutely. Absolutely.
Totally different. But if you have
Same
a
interest rate.
Yeah, if you have a 0.25% interest rate in that home in Silicon Valley and a 0.25% interest rate on that home in Oklahoma City, how much more per month are you paying in Silicon Valley than you are in Oklahoma City? And then if you're looking at investment properties, that increase in Silicon Valley, will that increase be able to be reflected into the price of the rent to make the cash flow?
Yeah.
Right?
Yeah.
So just because it's the same in one area than another area doesn't mean that your investment bottom line will be the same in one area over the other area. That's why working with competent agents like ourselves and other agents throughout the United States, sit down and talk to them if you're looking at investment properties. But interest rates are usually, as we said, across the United States the same.
Yeah. So we are not going to be able to unravel and sit down and find out what's going on with the rates. We don't have a crystal ball.
No.
We do stay on top of our data. We check in with our lenders to ensure where rates are going, where they are currently, and we advise you to do the same. And if you don't have a lender to connect with, then reach out to us, no matter where you are, and we'll find you a lender. So great episode. Another great episode, should I say. Mortgage rates, throw your hands up in the air. Who knows?
Yeah, but I think you can bet that they're going up.
Oh yeah, absolutely. Yeah, the data shows that. So again, we will put the information that we have. We're not going to hide anything from you. The data that we're reading and we're getting our information from, we will provide for you in the links below. And you can also hit us up on social media. There's all our links in there. Until the next episode, episode 50. We'll see you then. Hey, thank you for listening and watching the Nitty Gritty podcast here with the Tom J. Krieger team. If you are thinking about buying a home, selling a home, or even investing in real estate, please reach out to us. We are local here in Tucson, Arizona, but we are also connected to over 4,000 agents across the US. So again, looking to buy, sell, or invest in your hometown, reach out to us and let us connect you.